Good morning and welcome to this morning's session entitled How to Turbocharge Development Finance. This session brings together a lot of the themes we've been discussing here at the World Economic Forum's annual meeting, everything from the need for development finance, the future of climate action, the economic situation the world finds itself in, and the need to reform multilateral institutions. Welcome to all of you here with us in the room, and welcome to those of you joining us online. I'm Mina Al-Oraibi. I'm the editor-in-chief of The National, based in Abu Dhabi, and I'm delighted to be chairing this session. Scaling up financing at a time of economic hardship is going to be quite a challenge, but it's one that is important and must be met, and we're going to try to tackle that in this session. The estimate is there is $4 trillion of a financing gap for the Sustainable Development Goals annually, and so we're only getting further away from the goals. Not for lack of funds, but how do we make sure that they're pledged and they're delivered on? The Addis Agenda, agreed upon in 2015, was meant to tackle a lot of these issues after an international meeting in Addis Ababa. And yet, financing for sustainable development is still an issue today. So, how can we scale up? With me here, Masood Ahmed, President of the Center for Global Development, based in DC, Rania Al-Mashat, Minister of International Cooperation for Egypt, Rehman, Federal Minister for Climate Change of Pakistan, and Lord Nicholas Stern, Chair of the Grantham Research Institute on Climate Change and the Environment in the UK. So, for those of you online who'd like to engage with us, the hashtag is WEF23. Okay, Nick, I want to start with you. Overall financing of sustainable development often is referred to broad picture, and then some people talk about climate finance. Are they two different things? Do we have separate tracks, or do we need to think about all development finance as climate finance?
We must be absolutely clear that they are not separate. Sustainable development is about offering to the generations in the future opportunities at least as good as the ones that we had. That's the meaning of sustainability, and it's captured in the Sustainable Development Goals. That's what our definition of development is. And climate action is situated within that, is part of the same story. But we must be very clear that investment in education and health is not a conspiracy against climate. It's part of sustainable development. And we shouldn't be doing anything that's unsustainable. So we have to see climate finance as part of the whole sustainable development story. On the numbers and the scale, within that whole picture, work which Veera Songwe and Amma Bhattacharya and I did at the request of the COP27 and COP26 presidencies, working with Rania and her colleagues, we said that if you take the energy transition, if you take, which is the bigger part of the investment story around climate, if you take loss and damage and adaptation resilience and natural capital, and if you put those three together and focus on emerging markets and developing economies outside China, I mean, China is hugely important, but they don't need the finance. So you get to around $2.4 trillion a year, sitting within that 4 trillion that you've described. If you look at how much can be financed internally, and most investment is financed internally, but for some countries more difficult than others, you get an external flows necessary, and these are for 2030, of around $1 trillion. Probably a third of that should be public, mostly MDBs, and 2/3 private. I mean, it varies, and of course the different components, adaptation and resilience, will be much more public than financing renewable energy. So that's, in terms of a rough estimate of the sorts of flows we need in 2030, $1 trillion of external finance, 2/3 private, 1/3 public, and that tells you how to reform the MDBs, because that's the rubric. It means multiplying by 5 the flows from the MDBs relative to pre-pandemic levels, multiplying by 3 within 5 years, multiplying by 3 within 5 years, and increasing the multipliers, which are below 1 in terms of relationships with the private sector, by 3, 4, 5. So we're talking about reform of the MDBs. Here's the rubric. Multiply by 3 in the next 5 years, MDBs as a whole, increase your multiplier relative to the private sector 2, 3, 4, or 5. And then that's the rubric for reform. And then you discuss reform around the purpose, as we did when we created the Bretton Woods after the Second World War.
So Nick's laid out what's actually required, and that it's not only broken down in terms of the rubric and what's required, but also we're running out of time. So how do we turbocharge? How do we make sure we get everybody aligned, be it the multilateral institutions, be it private finance, countries? What's required?
So I think Nick's laid out very nicely the framing of what's needed. And the only other point I'd add to that is that the way we think about the future, the role of these institutions, larger, 3 times larger in terms of what they lend, 5 times more in terms of what they mobilize, but also different because the way they have thought about their work so far has been entirely framed within a country by country by country approach. Some of these new dimensions that we're talking about, whether it's climate projects, whether it's pandemic preparedness, whether it's looking at refugees, these require us to think also across countries. So these institutions also need to start thinking how to work across countries. So beyond that, I actually feel more optimistic now that we're going to see a discrete change in the operations of these institutions in the next 2 years than I felt in many, many years. Why is that? Because this topic we've been talking about for decades, reforming these institutions. And I think first thing we have to recognize is they've actually done a pretty good job in the past. It's the nature of the job that is changing, and now it's encouraging them to adapt to it. Why are they more likely to adapt? First, because I think one thing that becomes clear is that everybody now sees that the best route to scaling up financing for development and for climate-related part of development is by working on turbocharging the MDBs and the IMF in support. Most other ways of going at it, many of the schemes people talk about, the world will be 3 degrees warmer before we actually put those in place. So if you want to get progress, let's work on this now. So there's a political agenda. Secondly, I think for the first time, I see a recognition both amongst rich countries and developing countries on what are the elements of the agenda. Third, I think we are now also fairly clear that the institutions themselves, each one of them, not only has to change within, but they have to change as a group. That they have to think about working collectively on their impact. And that also includes the regional development banks, the national development banks. So by the time you bring all these people into it, you are actually talking serious money in terms of making progress towards that $1 trillion. And the last thing I'm going to say on this is that I feel that the process has now started. It started last October at the annual meetings of the World Bank and the IMF. The World Bank is the first part of this change agenda that's being tackled. I think between now and next October, so if we meet here a year from now, we should have got to the point where we've reached an agreement on what the World Bank should be doing. Yeah. There are 2 risks that we have to manage so that we don't fall short. The first risk is that we make some changes, small changes, but not the really consequential ones, and then declare victory and say, actually, look, we've made all these changes, we point to 4 things that sound good, but 5 years from now, when we look back, we really haven't made the changes.
So what's the one change that absolutely must happen?
You have to make the change to recognize that they will need to change the way they use their existing capital. They can get much more lending out of the capital they've got, and they'll need more capital. There is no way we're going to be able to reach the level of ambition unless we are willing to put some more money into these institutions, because it's the most efficient. Actually, the leverage you get is huge for it. In terms of you put $1 in capital, you get now 5, and I think you should be able to get $7 or $8 of lending. And remember that $1 is broken up amongst 180 countries. So for each country, you're putting in a few cents to get a lots of dollars of lending. And the other big risk that I see is that we don't engage enough with the whole range of countries to make sure that this is seen as a broad agenda. The countries that don't see mitigation as their biggest problem today, but they see the need to deal with adaptation. I mean, Pakistan's right there, right? Less than a couple of percent of global emissions, and yet
less than 1%.
Less than one, and yet whole of Africa, less than 1% in many countries. So they still need to be able to be given enough from this whole package to see this as a package for everyone.
Thank you, because I wanted to turn to you, Sherry, about that. This idea, there are national needs, there are subnational needs, and yet we talk on a global level. So how, for you, as a government minister that's having to plan for your own internal needs, does that sound? I mean, do you see this as a global approach?
I do see it as a global issue because I think, look, it was just refracted very neatly here. We're being impacted by global warming, the heat wave that brings 53.7 degrees, not fit for human growth or growing food or anything, right? That causes catastrophe, and it's becoming serially so. So serial catastrophe is putting countries like ours in recovery traps, meaning by the time we are rebuilding, and that adaptation or resilience rebuilding, it costs money. Mobilizing that capital, yes, you create the tools, the projects, the bankable plans, and then by the time you do that, the next crisis is on you. So I think moving on from all these very excellent points, climate vulnerability has now got to be factored in front and center as the first polycrisis of this century, but not just this century. For us, as you mentioned, we're running out of time. It's against the clock. And that means that we've got the decade. We are in that front line, and there hasn't been one other discussion here. Look, if we estimate $30 billion, which the World Bank does for economic losses and other damages, and we were just raising 16 billion, half of it is ours and half of it is the pledges we got at Geneva last resilience conference. What does that still do? By the time it rolls round, as I said, the summer is just upon us. In 2 months, the heat waves, the forest fires will begin, and you're bracing. Nobody is covering risk for us. And I mean real risk. I mean in terms of human capital, we have been, 1/3 of the country was inundated. So a lot of emerging markets are now submerged in both debt as well as and high public debt. So you can't really pay for any of that resilient recovery. It becomes real pie in the sky. And then you also have a situation where the infrastructure on the ground is still lying broken. So navigating that or getting your head above water, literally, is it's a challenge, and we feel that it's not being addressed by the MDBs, who are not absorbing the risk they should. We are paying high interest rates. The debt is piling up higher and higher, and yes, we do need structural reform. There's absolutely no walking away from that. But there has to be some sensitivity to the scale of vulnerability and human fragility. Again, there's food insecurity immediately follows, right? If your topography is transformed for 10 years at least, 1,000-kilometer lakes, you're not going to grow anything there. And then there's the energy shock. These are very real problems and crises. Now, 2 years ago, you're buying LNG at $4, and now you're buying it at 10 times that much on the market, and we're competing with the Europeans. So there's an energy crisis,
right.
There's a debt crisis, and then there's
the cost issue. But if we're talking about how to, and like you said, you just had the Geneva conference, which by international standards was very quick action compared to international standards. I mean, do you feel that that was a model that actually, responded to Pakistan's needs? Because if we talk about tangible examples...
That's a new model that okay, the UN partnered with us. They've been doing their bit, okay? That's multilateralism rising to the occasion. And I have to commend that. But they're not the investor. They're not the funder. And they are bringing their moral engine to the table. That's all they can do. They're convening power. And they're pushing for change. That's been absolutely impeccably done and powerfully done by the Secretary General. But moving on from that, we can only pull in, the 3 months, we still have humanitarian crises. There is still an underfunding. If you have 33 million people affected in the catastrophe of the century, what goes round? We haven't been able to rehabilitate all of them. 8 million are still displaced.
But
right?
beyond the issue of finance,
So
is the
where-
government able to actually deliver if the financing is there? I mean, there's also a capacity issue.
Of course there is.
capabilities
That
issue.
is what I'm trying to also allude to, that how do you rebuild, rehabilitate, build bankable projects, and respond to high indebtedness at the same time? And obviously that breeds conflict and political instability. So we then become, and many countries, now 55 countries are in deep debt distress. So is Bretton Woods addressing the crises of the 21st century? I'm not saying go from Bretton Woods to Bridgetown, but look at it, for crying out loud. It's high time.
So, Rania, you worked on a number of these issues in your career, but particularly during COP27, lead up to COP27, and now as Egypt continues its presidency of COP. Just financing is a big issue, and it's something that you've worked on. So tell us, how do we do that? How do we bridge the gap and get to just financing, but also at a time of high interest rates and global economic stress?
So just financing reflects a lot of what was said. I mean, and let me start with what Nick started with. Climate, SDG 13, is part of the 17 SDGs. So climate and development are not mutually exclusive. Again, Sherry explained, there is a human element related to climate change. So there are people, and people mean no hunger, no poverty, more partnerships. So all of the 17 goals are related to climate. And if we take that and internalize it when we're thinking about financing, we will have many, many answers. So when we say that we want a bank to be a green bank, it doesn't mean that we exclude all the other objectives. It means that we need to increase the pie, not direct the pie to one objective. I think this is a very important basis to start at. And this is what we worked on in the lead up to COP27. And it was through Nick's work, through our work, collectively, we were pushing this message because there's a gap to the SDGs. The pandemic happened. The gap in terms of financing increased. Now with the different climate pressures, this financing gap is also going up, and then comes compounded crises one after the other. So if you take a look at where is the financing of climate coming from, it has mostly come from public sources, from governments. And therefore, governments, either from the budget or from official development assistance or from going to the markets, and this has increased their debt levels. So this is when we say commitments, the pledges of the 100 billion, and then our COP was from pledges to implementation. So we tried through the work on just financing to say, how can we go from pledges to implementation? What is required? Masood mentioned partnerships. It's not the government alone. It's not the private sector alone. We need more grant components to make the projects investable, to add to the technical capacity at the start. The other very important aspect is country specificities. And you mentioned, Mina, that it's not just mitigation and CO2 emissions, but adaptation and resilience. And this was one of the other outcomes during COP, that food security and water security in many countries are top development agenda strategies, which are also climate strategies. So how can we make sure that countries are able to do this to achieve their national goals, but at the same time contribute to the global goals that all of us want? And then comes loss and damage. And you try to invest in adaptation projects to protect you from going into loss and damage. And therefore, if we do this investment, not cost, early on, then we don't have to move into the next step, which is loss and damage. But absolutely, you can invest in infrastructure, but you can be faced by a shock. And that's why this trust fund around loss and damage creates that, insurance policy, if you will, to protect and mitigate the impact of what could be going from adaptation to loss and damage.
Nick, I want to turn to you about loss and damage, because the principle is really important. An agreement was reached in COP27, but a lot of the detail and the implementation is yet to be seen. How do you see it happening? And do we think there is the political will for countries, especially countries like the United States with the political situation ongoing there, but other large countries willing to actually step up and support the loss and damage fund?
Well, they should. We've just hearing from Sherry, you know, a flood of that magnitude can wipe out 20 years of development, and you're starting from a much lower base trying to build back again. We have to see loss and damage as part of the whole story of development. Loss and damage happens when, notwithstanding all you've tried to do on adaptation and resilience, something comes along that's too strong for whatever you have built. And the confidence looking forward that you have a chance of overcoming that when it happens, of dealing with it when it happens, is fundamental to investment. So dealing with loss and damage is a matter of justice, but it's also a matter of strong and resilient development. It's not something separate, but it's a crucial part of this bigger story. And I just wanted to pick up on what Rania was saying about how all these bits fit together. And you know, if you take mangroves, and you know, Pakistan and India are going to move very strongly for mangroves.
We have actually.
Yeah. And what does it give you? It gives you protection against storm surges. It captures a whole lot of carbon. It's very good at that, and it's good for shrimps and fishing, and indeed for tigers and tourism. This is, you know, development, mitigation, adaptation, and a very powerful defence against the kind of stuff that causes loss and damage on such a big scale. Same is true of public transport, decentralised solar, restoring degraded land. This is mitigation, adaptation, development put together, and it helps you overcome that loss and damage. So the numbers that we're talking about here must include loss and damage, and see it as a part of the whole story of development. And as we do this, and you've heard from all of us, this is about urgency. Urgency. Rule number 1 of university teaching: if something's important, say it at least twice. Urgency. This is, we cannot wait. This year we have to get the moves, as Masood has described. We can't kick that can down the road. You know, there's in COP29, there's going to be another sort of look at the finance side, and there should be. But we can't wait until COP29 to do that. And that sense of urgency has to run through everything we're doing. And if we get it right, this is the growth story of the 21st century. Much better. It's more efficient. Cities where you can move and breathe, ecosystems which are robust and fruitful. It's much better than the form of growth and development that went before. But we've got to do all these things, and we've got to do them quickly.
It's interesting you mentioned mangroves, because I live in Abu Dhabi, and it's incredible. When you move to the UAE, you learn about mangroves and you see them everywhere. And also, it's in countries with harsh climate conditions that they can actually thrive, and in salt water. So it's almost this miracle tree that if only we take more seriously. But I want to pick up on...
It's a big example, but there are all those others, and this is that approach to development.
But one of the issues that, Rania, you worked on is your program country platform, Nuwafi. And the idea is... you know, it's energy, it's food, it's water together. But you're also relying greatly on private finance. And to your point, that if we're going to need finance, you're going to have an actual engine for economic growth. This isn't just about give us grants, give us loans. So tell us how Nuwafi is developing, but also this idea of private finance, because you can actually make money through this process.
Exactly. It's very important that moving through development, which includes climate, the government can't do it alone. We cannot, you know, through public finance. So we need to create an enabling environment for private sector investments. And renewable energy is extremely important. Water desalination today is attractive to the private sector. And also resilient agriculture is as well. And what we have tried to do in our country platform is say, we have a national objective, the Strategy 2050. We have NDCs, so each of our projects are earmarked to NDCs, which are very important nationally, but as I mentioned, add to the global goals, and then leverage on our partnerships. and try and put within our partnerships different financing tools that can draw in private sector. Grant components, debt swaps for climate action, concessional finance, and try and blend all of this so that private sector can come in. The very important part about the NWAFI program, and NWAFI in Arabic means fulfilling pledges, is that it's country-led. So it's in line, these are development projects that we want to do, we need to do. When you have this country ownership, you have commitments. We try to be as clear as possible with the description of the projects, and then we try to be credible given the international partnerships that we have. So we wanted at COP27 to show country-led. Partnerships are very important, and you cannot escape from, actually you need to invite private sector involvement. The idea also of just financing is that there's a historic responsibility, but also that there is this, I don't want to say a right, to being able to develop as well as do climate action. And the access to finance, there's a quality and a quantity. So there's the quantity, but also we need this financing to be sustainable. And for that to be sustainable is where this whole agenda on reform of multilateral development banks. Today, when you look at the World Bank, for instance, one of their flagship projects is a country climate development report, the CCDRs. This means that climate and development come hand in hand. So if we are talking about the reform going forward, we need to always be thinking about these things integrated, exactly as Nick and Masood and Sherry sort of emphasized.
Right, now I want to give the opportunity for those in the room to ask questions. So if you have a question, and I can see one at the back, please indicate to me and I'll come to you. So we've got a roving mic, just give us a moment until we get the mic, but kindly identify yourself and if you could tell us who the question is for on the panel.
Thank you. Hi, my name is Vince Chadwick. I'm a journalist with DevX, and my question is to Sir Nicholas Stern and the Minister from Egypt. I wrote a story after the COP26 event about a loan that the European Bank for Reconstruction and Development wanted to give to Egypt to improve the quality of oil coming from an oil refinery. And it was going to make tangible improvements to air quality in Egypt. But the optics of giving a loan to an oil refinery shortly after COP26 proved impossible from an NGO perspective and from on the board. And despite the best work of quite dedicated experts at the EBRD, the project didn't go ahead, the loan didn't go ahead. So my question to both of you is how you see MDBs working through this tension. They clearly understand the need for Paris alignment and to do the things you're describing, but they need to be relevant in the countries where they're operating. And there was a clear need in this project. It would have been a net good for the world, but it just didn't look very good in a COP26 environment. So what's your advice to MDBs as they look at the world as it is, I suppose is my question.
Thank you.
I think Masood wanted to answer that. Well, yeah, or you're looking at me? Okay.
Rania, you can answer and then we'll turn to Masood.
No, sure, no, I just thought that here. A very important point, that we will never be prone of public opinion at certain points in time. The world changes very fast, and sometimes the narrative around certain topics also face us. You're absolutely correct. That was a project that we worked on very closely with our colleagues at EBRD, and it did have actually climate embedded and climate objectives embedded in it. But at a certain point in time, and this is going to be a situation that we always face, be it on climate or be it on other issues, and that's why the advocacy around these topics through work by Nick, by Masood, by ourselves, by Sherry. This is the way we are able to push forward against some of the odds of narratives which could challenge different development banks.
I want to address something here, not entirely related. Before time runs out, it's very important that adaptation financing be addressed. Now, at the last COP, we were trying. This is important because this is the only seatbelt countries have. And I'm finding that it ends up having a Cinderella status in both financing as well as discussions. Resilience projects just kind of sit there. That really needs to be addressed. I mean, there's the Maldives. It's sinking in 8 years. Is their voice being heard?
So,
can I just come in one quick point, Vince, in response to the point you raised? I think that the core point here is that we need to move to a transparent conversation about what is and isn't sensible. And let me give you the current issue, which is that we in Europe, in the US, where I live in Washington, we see natural gas as a clean fuel. That's how we talk about it. But a lot of people are now increasing access to that as an alternative to coal. But when it comes to Africa, trying to develop its natural gas resources as part of its energy transition, the going-in view is that this is a fossil fuel rather than a clean fuel. And look, it's clean and it's fossil. I mean, it has a role. It doesn't replace. I see somebody in the back shaking their head on it, but it doesn't replace the renewable transition we want to move to, but it will be part of the package for a lot of African countries. Same thing arises on saying the same thing in different institutions. You have the same country sitting on the board of one institution, encouraging them to do more, take more risk, and the next day, when they take risk and make a loss on a project, because it is by definition a more risky thing, the same institution comes back and says, you know, you really need to be watching your risk level. So part of this is we just need to get a little more serious about recognizing that there are trade-offs in life, and you have to be on the same place on the trade-off, not take different positions depending on who you're talking to or where you're sitting that day.
Yeah. I spent 6 very happy years as the chief economist of the EBRD in the 1990s, but a long way from where we are now, and a great admiration of that institution and its work with Egypt. The key thing is the transition. We have to support as a world, and in particular in this case as multilateral development banks, the transition to net zero. And so we have to look at the package of projects and say, is this part of a transition to net zero? Now, for some countries, natural gas would be part of that transition to net zero. But it's not part of a transition to net zero if the intention is to keep it there for 30 or 40 or 50 years. You have to have an understanding of the build-up of the renewable part of the sector and the phase-out of the dirty part of the sector. And in terms of emissions, natural gas is dirty. It's not as dirty as coal, exactly, but it's dirty relative to climate. So it has to be part of a transition story. If it is, then it's exactly that. It's part of a transition story. But that has to be embedded, and you can't just do that project by project. That has to be embedded in the whole program. And that's the test that we ought to apply. Just to advertise one thing from my own university, London School of Economics, we have a transition pathways initiative, an index. So you're asking the question, if you're working with a fossil fuel energy company, is it moving in a direction that's consistent with 1.5 degrees and net zero? If it is, then participating with it can make a lot of sense. You can't. This is an energy transition. You can't divorce yourself from the energy companies. But that's the question that you have to ask.
Okay, so I'm going to take a couple of more questions. A couple of more questions, but we have to give shorter answers. So I'm only going to let one person answer each question. Please go ahead.
Yes, thank you. I'm Barry Martin. I'm with Rabobank, a big user, I would say so, of development bank in the projects. I'm very happy to hear today that we are turbocharging the MDBs. I absolutely agree also that we need to have private investment. What we face every time as Rabobank, as we work all over the world, is that it's extremely difficult to do blended finance with MDBs. It's everybody has their own rules. It's just impossible. So because this is we are talking about turbocharging, right? We should also, in the reform of the MDBs, have clear agreements how to engage with the private sector and not allow every MDB to do their own thing. So this is actually a question to you.
I agree with you. So the simple answer is I think we do. And I would say the way to do it is to set a delivery target for each one. If you say your performance is going to be judged not by what you put on your own balance sheets, but your success in actually mobilizing. You'll find that the incentive to streamline those rules of engagement will be quite different. It's like applying to universities. If your kids have gone to university, if you have to fill out a different form for every university with completely different rules, it's going to be a much harder process than if you can simplify.
It feels like that.
Yeah, I know.
Yeah.
Okay, question here.
Thank you. My name is Samant Subramanian. I'm the global news editor at Quartz and was formerly at The National. I had a question that Masood touched on a little bit just now when he talked about risk level. But I was wondering whether somebody on the panel could speak about how institutional finance is often tied to creditworthiness or the mandatory financial reforms, and whether these institutions need to undergo some kind of public, quite transparent exercise that recalibrates some of these conditions that finance often comes with, and what that would look like if these institutions chose to go ahead with it.
The key thing to working with the private sector, apart from being sensible and easy and quick, is managing risk. The reason that the cost of capital is so high for so many developing countries is the perception of risk. And so what you have to do is to have the project itself designed in a way with, take-off agreements or feed-in tariffs and so on. There's a big part of the story there. But the finance itself has to manage and share and reduce risks. Equity, political risk guarantees, flexible things, very long-term loans. And that's absolutely critical because there's plenty of savings in the world. We need to bump up the investment. Many countries face negative interest rates now, given the level of inflation. But those who face very high interest rates, that's about risk. So the skill now for these institutions, as well as being easy to work with, is to design and give their products, make their products and instruments such that risk is brought down and managed, and therefore the cost of capital comes down. And that's the way to work with the private sector.
I guess what my point was that there seems to be something contradictory here because you're trying to manage climate risk. Mm-hmm. Risk is a part of that. So how do you sort of try to manage risk levels while you're trying to inherently bring down the effects of climate risk, which is an inherently risky proposition?
Rania wants to take
I think the risk we're talking about is the financial risk in going into the countries that need the financing the most.
Exactly.
Most of the countries that need financing are ones that are rated B and below. So the whole concept of blended is to try and add a grant component, a concessional component, so that the private sector can be enticed to come in. And I think, going back to the question here, that there needs to be a serious dialogue with the private sector in the MDB reform. Those who are going to do the structures, those who are actually going to have the incentive to go in and invest in a project need to be on the table to see, how we can go about with the MDB finance. So then maybe that's a call for action as well from this panel.
Okay, and there's a question here.
Thank you. My name is Fawn Sharp. I serve as president of the National Congress of American Indians, 574 tribal nations in the United States. My main goal in attending WEF this year was to try to gain access to resources. The world knows indigenous peoples are on the front lines of climate change. The world knows we're disproportionately impacted, and we have little to no resources, and we don't have direct access. Many times, nonprofits work. They utilize our images. They secure funding, but we don't see it. It's disconnected. And we do not have access. We have a sense of urgency, and I'm looking for advice on how to gain access, how to influence, as you mentioned, crossing across countries and boundaries to sort of these greater issues, overarching issues. So I'm just here to get some advice. Thank you.
Masood, do you have advice?
I'm struggling to see what advice I can give you that would be really helpful for you. But I will just say this, that I think ultimately a lot of the money that we're talking about goes through national governments. And the way to get access is to make sure that the national governments where indigenous communities live in countries have a sense of accountability and responsibility to those communities. I mean, they are often marginalized in terms of access to national resources as much as international resources. So I would say to you that it's not so much a parallel track, it's by ensuring that the national governments actually put that higher on their agenda. That's
Well, I also want to speak to that. I think the way we address national governments at big multilateral forums, especially like COP, I think now indigenous peoples and other blocs, you need to form a bloc outside your national government framework and have a seat at that table. At that table should, at the COP one, I think there needs to be private capital now. Yesterday we were talking about that. If we're going to constantly seek blended finance and private capital, they need to be shaping how these projects are designed. They need to be speaking to where that spending goes, how they manage the risk, and speaking to a lot of companies want to do their CSR. They would love to say, all right, we're directly investing in this block. And then, of course, it goes in a stream through the national governments. But it doesn't have to be in that framework. These boundaries are outdated.
Nick, you.
Yeah, one piece, if I may, and it's for you to make up your own minds and programs, but come with projects and programs. Say, look, we understand our own situation. This is what needs to be done. We need to invest in degraded land and restore it to productivity and capture carbon. Here are the vulnerabilities we are facing because of the melting of the glaciers. This is what needs to be done. So if you bring your projects and programs and say, we know what needs to be done, this is what has to be financed, make it happen.
Okay, so we've only got a few minutes left. So I want to close the session with a question to each of you, which is we spoke about time, urgency. October, hopefully, we'll see more of this at the annual meetings of the World Bank and IMF. But also, we've got COP28 coming in the UAE, and then we meet here again, inshallah, next year. So, one piece of advice or campaigning advocacy point to really turbocharge development finance, what would it be if you had one issue to really push?
Yeah, we tried to put everything together in the Sharm el-Sheikh guidebook for just financing because we felt there was an information gap on what is available. There's so much available when it comes to climate finance, but it's not known to the countries, sometimes not known to the private sector for access. So I invite, it's on the website, it has a lot of detail. And I just, between now and COP28, we will be advocating it and all the details. So I invite everyone to go on the website and take a look and see, what types of capital, what is the risk that's there. There's a chapter on Africa given that, in COP27, we're looking at adaptation and resilience.
Nick.
Agree at this spring's annual meetings of the Bank and Fund that we have to triple lending within 5 years, and that we have to go 3, 4, 5 on the multipliers and make that the conditions, the rubric, what we have to do. And by the annual meetings in Marrakesh, the leadership of the World Bank, working with the shareholders in the private sector, must come back with programs how to make that happen this year.
This year, Masood.
I'd say much the same as Nick, which is let's get behind this year, put all our energies in trying to get delivery and get this point on MDB reform and IFI reform. It's the one thing which I think we can actually get done if we put our minds to it and energy behind it. But let's not then have many ideas floating in pursuit at the same time, because it'll just dissipate our energies rather than getting this one thing delivered.
Sure.
I think the pool has to be very clear. It has to be bigger, as mentioned. But also there needs to be, for lending and for the evolution of concessional financing, that has to grow. And thirdly, there has to be a vulnerability index that is common to all. You cannot just lend on the income status of a country. It has to be now responsive to a vulnerability status, mostly climate, mostly development. And that should be the new framework through which the index, through which lending and concessional grants come through.
But do you think, with the current economic climate and with the current political climate in many of the large countries that would be coming forward with these funds, there is appetite for that, to actually accept greater risk?
I think there has to be now. There is a sense of, I do sense a recoil. You are quite right in tapping into, there's a recoil that we'll be made accountable, we'll be audited for what we spend and how we do this. And, this whole business of loss and damage has caused a great deal of worry and anxiety. amongst the big spenders, or who are no longer the big spenders, and they're saying, okay, you know, we're at a moment of razor's edge with inflation and all that. Now, cost of living crises are hitting everybody in the world. I don't think that the loss and damage fund at any point, or even adaptation asks, are focused on anything like reparations. Let's put this on the table. That is not realistic, and it's never going to be responded to. So, you know, let's create some stability around these conversations. If the adaptation pool itself is developed and climate financing itself becomes more agile, we'll be on a track where at least the trust deficit from the global south is bridged. Right now, there is one.
And on that note, our time has run out. Thank you very much to my panel. We have our marching orders. Let's hope that governments, multilateral institutions, of course, the MDBs, and others are ready for the challenge. Thank you very much, and thank you to our great panel. Thank you.